Welcome back to Hitting the Bid, the place for retail traders by a retail trader. I'm your host, Jeff, and I'm here to break down market moves, share lessons from my own trading journey, and help you navigate the ups and downs of life in the markets. Whether you're just getting started or have been trading for years, this show is here to help you stay sharp, stay disciplined, and most importantly, stay in the game. Today is Thursday, June 26th. Let's get into it. Looking around the market here on a little bit of a market update, we have the S&P 500 up a little bit over $3, 0.5%, kind of nearing those all-time highs here back from February, so trying to make a run back there. The NASDAQ through QQQ actually did get back to all-time highs, got as high as about $544 today, right now up about 260 and also up 0.5%. Russell 2000 up 0.9%, almost $2, well off its highs back in November, but it's looking like it's seeing some strength here this past month or so. The VIX down another 2%, 2.4% today, which is 40 cents down into the 16 handle here. So really getting crushed this week. Bitcoin been pretty strong most of the week, up at about 107,500. So showing some strength there. Bonds really just pretty steadily strong since about May, finding a bottom here May 22nd. Putting up the drawings here, it looks like it is coming towards this range that I initially thought. I might have to move this up, but it's really finding some good momentum here over the past couple of weeks. Looking around to currencies, we have the British pound and the euro really showing a lot of strength here recently this week, which is driving a lot of the dollar sell-off for the week. So again, euro up about 0.5%, and the pound up about 0.6%. Real quick at metals, gold been pretty much selling off since mid last week. Right now at about 33.30 or so. Silver kind of consolidating here in a range. Was strong a couple of weeks ago, but kind of just bouncing around here in the 36 to 37.5 range. And oil really getting crushed this week after some relief over the geopolitical events out in the Middle East, but right now trading at about $66. Did get as high as about 78 at futures open on Sunday, but trading much lower today since then. Now looking at the First Solar FSLR trade from last week. I did close it yesterday for a small profit, about $25 or so. On Tuesday, it closed about 4.5% higher, and yesterday it didn't seem to have that much follow through. So I decided we're coming up on 21 days to expiration on the position, and I would have closed it on Friday anyway. So I just decided to close it yesterday because of the lack of follow through. With it up today, I could have made maybe $20 or $25 more, but that would be judging things based on the outcome, and I don't really want to do that. So just taking a look, here is the trade. Sold it at about $1.60 on that vertical put spread. And I closed it for $1.32, so it's $28 worth of profit, and then there are the fees. Looking at Chipotle, I talked about this one in the newsletter. By the way, if you haven't subscribed, you can do so at news.hittingthebid.com. Now, I did find some bullish momentum to start the week when I was writing about it, but it looks like it has reversed today. Just putting up some of the drawings here. It does look like that overhead supply that I referenced, those sellers that bought at higher prices. It looks like it may have acted as a bit of resistance. We'll see where it goes from here, but right now it's down today almost $1, about 1.6%. Now for today's trade, I'm going to look at HIMS. This is similar to the FSLR trade. Now at the start of the week there was, I'll kind of compress this a little bit here. At the start of the week there was a pretty big sell-off It looks like it went from about the 60s to about $42. And I think it was based on some news event. Not really that something that I care too much about. But since then, it has stabilized a bit over the rest of the week here. Now, IVR is still elevated at about 40. So with that implied volatility rank still increased, I'm going to look here in the 50 days to expiration, so this August cycle here. I'm going to look at selling this 37 put. I'll just go ahead and put it in mid-price for now, and then I'll talk about why. So this 37 put is a 28 delta put. I'm going to put it at mid-price. Now it's only using about $370 worth of buying power, and I sold it for $345. It looks like I was filled. Now this is a bullish strategy that is simulating about 28 shares of the stock, and that's about a third of the buying power if I had bought 28 shares. Now the stock could go up or trade sideways. Volatility could come in, and just time passing by, and this position will profit because it is a position that I sold, put that I sold. Now just looking real quick, earnings hasn't been confirmed. It says August 4th here on the platform, but if it's confirmed, there's an arrow here that shows. It hasn't been confirmed, but it's that earnings date. It's close enough to that August expiration that I sold the position in, and I'll be out of the position by then, so I won't have to worry about any earnings news. All right, and that's it for this week. Thanks for tuning in to Hitting the Bid. If you enjoyed today's video, don't forget to subscribe, leave a review, and share it with a fellow trader. You can also sign up for my weekly newsletter at news.hittingthebid.com, where I share market insights, interesting tickers, and practical strategies to help you grow as a retail trader. Until next time, trade small, trade smart, and keep hitting the bid.